Big news story that has been recent. So last week, the Fed cut rates by 25 basis points. And although Chairman Powell said that a rate cut in December isn't completely on the table, it's looking more and more like that might happen because we're seeing news coming out. Reports of 80,000 jobs cut with severance in India. And you've got layoffs that are happening. White collar jobs disappear as AI starts to bite. We've known this was going to be coming for some time, but it's accelerating right now. Major employers are laying off amid a tough labor market. AI fueled economy is a big one, but it's not just the tech stocks that you and I have heard about. I mean, more recently, we've heard companies like Walmart and McDonald's laying off. And this is interesting because we're about to hit the holiday season. So when you look at a company like a Walmart or an Amazon who is laying off right before the holiday season hits, I think what we're hearing about is we're not hearing about temporary jobs. We're hearing about the long-term career-minded people, career-minded position. Hey, I'm Tom Gentile, America's pattern trader, and while other traders are bracing for the worst months in decades, I already know what stock I'm trading this month. My money counter has identified the most reliable stock patterns over the next 30 days with a 90% or better historical probability. Scan my QR code or click the link below to learn how to get this month's money counter for just $9. So here's our top 10 biggest company layoffs that we're getting as of recent news. UPS is number one. They're saying they're going to be laying off 48,000 employees. Amazon up to 30,000 employees. And although this may not be today, I'm pretty sure it's going to be happening right after the holiday season. Number three, Intel, 24,000 employees are set to go at Intel soon. Nestle has a 16,000 employee reduction coming. Accenture, 11,000 employees. Ford Motor Company, 11,000 employees. Novo Nordisk has 9,000 employees set to be laid off. Microsoft is laying off 7,000 employees. PwC, that's a private company, 5,600. Salesforce, 4,000 employees. Let's talk about these names for just a moment. Now, let's scratch out Nestle because that's overseas. No disrespect to the folks on the other side of the pond. That's not a publicly traded company right here in America, nor is PwC. That's a private company as well. So we're left with 8 companies. And when I look down this lineup, I see UPS and I see Ford, and I kind of group those together. Ford's a automobile manufacturing company. UPS is really a delivery service, A to B. Okay. Then you've got Amazon, and you've got Intel, and you've got Microsoft, and you've got Salesforce, and I think even Accenture might wrap in there too. They're more on the tech side, all right? Salesforce technology, but Salesforce is more in that CRM, all right, customer relations management software. Microsoft, obviously, software, retail software, commercial software, AI. We've got Intel on the chip side. Amazon, you could categorize that in a lot of different areas. It can be categorized in so many different areas, but they are ramping up on AI. When you take a look at all these companies, AI has something to do with all of them. But of the 8 we're looking at, where do they sit as we as traders? And if I were to pick 3 of them, which 3 do I like in the midst of these layoffs? Let's talk about them. Well, I immediately scratched 5 of the 8 off. And the 5 of the 8 that I scratched off were because they were charting lower and not higher. All right, so they were already having problems before layoffs. And so the 3 that I left over were the ones that were near the top of their charts for the year. And it looks like layoffs are just going to make them more efficient. And it's not because they have problems in their departments or their companies. They're just adding to their efficiency, something we've known about. It's going to be coming for some time. Amazon is one of those stocks where company had a low of $160 back in April of this year. It's high. It just hit. It was at a year-to-date high that was back in January. And if you remember, coming into really just even 2 weeks ago, coming into their earnings, didn't look great for Amazon. Amazon blew their earnings out of the water and jumped up and immediately tagged the new year-to-date high. And so now what they've been doing is just been adding to that. And I believe that the layoffs that you see coming from Amazon are they're going to be strategic. They're going to be layoffs where AI is going to go in and it's going to not only meet that productivity, but exceed that productivity. Number 2, Intel. You would think the folks at Intel would have been breathing sighs of relief when the government decided to take a huge chunk of investment into this company. But no, that's not the only reason Intel's going up. Intel's going up because they know that between soft AI and robotics, continued robotics, it's going to all but make their company profitable again. And so the areas where they're going to be creating most of their layoffs are going to be in middle management, which AI will take the place of a lot of that middle management, which will no longer be needed. Intel has seen lows of 18 and more recently, just last week, hit highs of $41.53. That is between 18 and 43. That's more than a double that has occurred, not since April of this year, but really since about August. August, September, October, in the last 3 months, the stock has doubled. And with layoffs coming, I think that's just going to keep the ball rolling to the north for INTC. And finally, Microsoft. Microsoft, as you know, it had its lows also back in April, but it has hit its highs. It hit its highs back at the beginning of August when it jumped up above 550. Then it dropped back down again to below 500. And just last week, it hit 550 again. So it is playing around with those areas of $550 with their latest announcement of layoffs. Again, their layoffs are going to be, the majority of those layoffs are going to be because AI and robotics are going to be taking over a lot of the jobs, and of course, middle management as well. This will all but continue to increase their bottom line. Of these three, which one makes the most sense to me as a pattern trader? Here it is. Microsoft, because in the next 31 days, Microsoft has a pattern that takes it higher into the holiday season, into mid-December. Over the last 10 years, it has done so 9 of those 10 years, with 2021 being the only year where Microsoft had a less than 1% drawdown in its stock between now and mid-December. Every other year, it was greater than 1%. In the last 3 years, it's above 5.5% on average. So, in summary, layoffs are bad for employees. All right, that's true, but they're good for companies, as companies that are losing money can now start to slash their expenses. Companies that are making money, all they're doing is allowing their margins to get higher. Okay, robots coming with AI continuing to add on. This is just going to increase bottom lines, and adding this information, this newsy information of layoffs, to what we already do as traders, focusing on technicals, focusing on seasonals. This creates rules-based patterns for you and I.